The Cryptocurrency Blockchain Connection. Cryptocurrencies are not the blockchain. Learn the differences and connections by Wayne Walker. Narrated by Russell Newton. Introduction. Congratulations on your personal copy of The Cryptocurrency Blockchain Connection. This special book will give you a foundation of cryptocurrencies and blockchain technology, along with the ability to tell the difference. You'll be exposed in great detail to the many possibilities of blockchain, along with the limitations. Thanks for choosing this book. Cryptocurrencies, besides Bitcoin, what do they do? For the many people that are still in awe of the amazing price movements upwards that we have seen across a lot of the cryptocurrencies, the one question that I receive the most from new students and others is, what do they do? Bitcoin, of course, gets the spotlight, but for the other cryptos, most people draw a blank. Let us have a look at the more popular coins and later some thoughts on the market movements. Ethereum, ETH, programmable contracts. Bitcoin, BTC, moving money, settling transactions, a digital asset. Dash. Key feature is privacy. Monero, XMR, private digital cash. Litecoin, LTC, similar to Bitcoin but faster. Ripple, XRP, enterprise payment settlement network. Neo, Ethereum for the Chinese market. Why have they appreciated so much? Besides the questions about what purpose do cryptocurrencies serve, the next hottest topic is about the market movements. The story that I share often in class is about when I traveled to New York City in May of 2017 on a working vacation. Then, Bitcoin was trading at a little over $2,200. I returned to Europe in August, and it was over $4,000. Now, what was fundamentally different about Bitcoin by August to warrant an almost doubling in price? On the surface, not much. However, Bitcoin and cryptocurrencies in general are based on trust in the systems that supports them. With that in mind, the rocketing of Bitcoin beyond $19,000 and altcoins making eye-popping gains for anyone setting a limit on what is reasonable is clearly indulging in wishful thinking. There is no exact science or logic here. How you should trade them. From my background and training within the capital markets, Forex specifically, many of the coins are in extreme overbought territory. For some of the reports that I have read from different analysts, Bitcoin will continue to make massive gains. I can't really laugh at them anymore or apply all of my previous training. What can be used, and I strongly suggest this for anyone trading any asset class, is to make failure survivable. Not my quote. It is well known to engineers and people involved with startups. Invest or trade with risk capital across several of the coins that have sufficient volume so that your ability to enter and exit is relatively easy. I am aware that there are many views on what is sufficient volume. I need to see at least 1 million plus. Finally, you can also consider cryptos as a hedge to your investments or trading. They qualify because, as an asset class, they do not correlate with other assets, for example, stocks or commodities. In the later chapters, we will explore deeper into the best trading practices for crypto trading. After all the hype, what should you really have in your crypto portfolio? For even the casual observer in the fall of 2017 into the first 2 quarters of 2018 have been a wild ride in cryptocurrencies. It appears for now, as I had written in articles on the web, some of the hype would subside and we can get on with
Sample complete. Ready to continue?